Turn the recorder on over here and flip. It's got 3 charts to show. Start off with a YM chart. Okay, can everybody see the YM chart here?
Yes, sir.
All right. So in this trade recap, what I like to do is go all the way back, but first I'd like to get everybody kind of oriented to what we're looking at here. These wider dots are similar to what you see in the room on Gary's charts, which are kind of large and fuzzy. We call those the guidance dots. This is a 12 range guidance dots. We kind of use this for keeping us, on the right side of the table as far as long or short goes. And you can see right here, this is around 4 o'clock Pacific, 7 Eastern for you early birds. Right in here, for instance, you see that the dots flipped from short to long. See how they flip? See how you had this little resistance area right here at this pivot, 934. Came up and broke it, giving you a nice long trade here on the breakout. And of course, you see here we've got this is basically the background. We have all the Viper stealthy indicators on here, and then this is the breakout math. This is the pivot levels we talk about sometimes in the room. Anyway, so let's just quickly go through this. So you can see here it pretty clearly broke, setting up the long trade. Your initial stop was down here. One of the reasons we like YM and NASDAQ and the dollar is that they're only $5 a tick. So, let's just do a quick calculation here. Let's suppose that you got filled at, I don't know, 34-ish, right in here in this circle. See how it broke the pivot, 34? Now, your initial stop was down here just under this this level right here, which was 20, well, I'll call it 20, 21. So how much risk do you have there? 20, 34, 14 times 5 is what, 70? So just to let you know on this trade here, your entry was 34 and your stop was around 20. So you're looking at about $70 of risk. Now most traders can handle $70 of risk, okay? That's one contract on a $5 instrument YM. So if you find, for instance, that some of the high-flying instruments like, say, EMD and the Roosty, TF, Russell, at $10 a tick, if you feel that 15 tick stops, that can be $150 on one contract stop. If that's a little beefy for you, the YM and the NASDAQ are a good alternative, and the dollar. I'm going to show a dollar in just a minute. Everybody see the initial risk there? You get a nice pop up here. Now what I want to show is this. Let me blow this up so you can see a couple of things real quick here. Notice how after we peek out through here, we go into what we call our yellow probe retracement, and we cover this in the webinars, how to look for support and resistance. But you can see right here, we broke this little retracement line and started to head back up right in here. See it? See, like right in there? We start hitting our head. See how she's hitting her head right at this pivot? And you got here's our swing high low dots. See them? Notice what happens here is that after it hits its head, what does it do right in here in that circle? Right. Breaks out. Breaks out. This is your trade. This is your entry right here. This is your entry right here. See how it starts heading higher? You can almost tell, you can see it, sense it when it starts doing something like this. See how you had a retracement and then it starts forming like a little pennant wedge pattern with the apex or just above that pivot. So of course here's your entry. Trail the stop, trail the stop, trail the stop. You almost got taken out here. And that's why we suggest on most trades that you want to trail your stop just a couple of ticks behind the trailing stop dots if you can, to give it that wiggle room that Gary was talking about. Because a lot of times you'll see these wicks of these candles will come and they'll just nick that support level by just like a tick, just nick it. And of course now, if you got nicked out there, it's okay, because see here, we came back above the pivot, right in here, and you had another chance to get in if you wanted to catch the tail end of the move. See it? So even if you got nicked out on a stop here, you still had a re-entry opportunity here. Now I want to show a couple other things. Of course, here's our guidance dots from the Pro package, keeping us long, 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 long. We get another retracement here. This is a beautiful, this is like a textbook. We got a couple of textbook probe trade setups here. Here you come above the pivot, come back below it. Your bars turn yellow. See, we start to poke up through it. See our little retracement line? It's our 45-degree retracement line that we put in. Now you have a buying opportunity on this bar right here. Jesus, the guidance dots are 12. Yeah, this is set to a 12. Yeah, and we're trading a 4 on the YM. Yeah, 4 on the YM. Now, if you didn't take this opportunity here, because a lot of traders, they're like, well, Charles, I draw this line and I see it breaks the pivot. I see this was absolutely a good entry, but I have trouble taking those. Well, you had another chance right here. See how once again, see this pattern repeating itself? You're holding above the pivot. See it? Hitting its head, resistance, 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 and what do we do on those candles right there? Yep, break to the upside. So if you didn't take the what we call a probie, a yellow bar probie break here, then there was your entry right there. Now you felt a little bit of heat on this probe trade. You were actually up to the good here, hit its head on the pivot again, right? Hit its head on the pivot, rolled over, almost nicked you out right here on that one right there. See, it held it. That's why you got to get a couple of ticks of wiggle room. Don't put your stop so tight. I talk to so many traders all the time. They're like, Charles, darn it, I had my stop was so tight. It just took me up by like a tick. And then it ran like 50 ticks straight up, and I didn't want to chase it. So, look at it this way. If it's going to retrace 8 or 10 ticks, why not give it another tick or 2 to 12? It normally pays off. Here you have another breakout coming above the pivot again, right in here, and boom, up she goes. All right, let's look at the last couple of trades here, and then I'm going to bip a couple other charts on here. Here was another good run, and this is actually the run that technically I think is still in play right now. No, it just stopped out. Okay. This was the final run here. Remember we were talking about the 80 area? Remember we were saying 80? Anybody remember that? You YM traders watch for the 80 break? Well, here's why I was saying 80. Anybody remember that level? This is what I was looking at the time right here. See how I drew this line? This was like your simple, very basic, straightforward retracement. Just price action channel 101 here, right? Just retracing right in. Notice it held a little bit above our pivot here. See the swing level where they broke out over here? Notice how this now provides support. See it? Notice how these candles start pinging the 80 level. It came through the channel, starting to break up, breaking up, hitting their heads, oscillating around the 80 mark. Now, if you didn't get 80, you got another shot up here, yes? Here's your normally on most of these trades, not all trades, but most trades, you normally get a couple chances to get in. And this is a critical thing that we teach all the time in our webinars is the first step to successful trading is obviously just simply seeing the proper entries and then taking them, right? Seeing the proper entries and taking them. Visualizing this, it can be difficult in the beginning when you're learning. But if you learn these simple entry techniques, then, of course, it comes down to stop management and exiting, which we'll talk about another time. Everybody see these entries? See how straightforward that was on YM? This is a nice little instrument. If you don't trade it, you might want to put a chart up and start to watch it. It's been, with all the nice volatility we're having really nice moves here. Let's just say that you took this trade. Let's say you didn't get filled until, I don't know, call it 90. Say you didn't get filled till up here around 90. It ran all the way up here to, what is it? Well, it peaked out around 4. It gave you like 2-3 times to get out here, right? 1, 2, 3 times. Call it, let's say you stopped out at 35-ish. Let's say after it peaked out a couple of times, you just pulled the trigger and got out up here. How much is this one trade? Let's say you didn't take any of these other trades, all these other trades. Let's say you didn't get any of them. Here you had 1, 2, 3. Say you just sat on your hands and you took that fourth trade right there. How much money did you make? $5 a tick, one contract. You got filled at 90, and you get out at 35. Yeah, what is that? 40 ticks, or plus or minus 45 ticks, a couple $100, 250, 235, maybe 2 1/4. I mean, that might not sound like much, but you do 1 or 2 of those a day. Over the course of a week and a month, you're putting a little bit of coin in your pocket, yes? And you didn't feel any heat on that trade at all. I mean, if you got in here, it oscillated around the 80 mark for a little bit. but the 90 break was clean as day. You know, I mean, just say you took these two. Say you took this one here, you got filled at 60, and say you got stopped out at, I don't know, call it 90. Say in here, 90-ish. There's that 30, there's another 150. I mean, these two trades alone are $375, pushing $400. That's just two simple, straightforward trades on a $5 instrument. I know most traders would be pretty happy with $400. Any questions on YM? And it's not so much, Ann's question is this, why don't we trade the ES? I should let Gary answer that one. We call that affectionately the slop and pour, mainly because we find it's heavily institutionally traded. And so you find that while these other mini instruments are getting these 50 beautiful 100-tick runs, 70, 80, 90, 100-tick runs, beautiful breakouts, you know, textbook probes, the ES is slopping around in a sideways mess. Before we close, I'll pull up an ES chart and we'll look at it. Any questions on YM?
Pretty good today.
Well, I mean on a trending day, yeah. But I mean, go look at a non-trending day on ES. You might as well just draw a whole box around it and just put an X over it and say, stay out. Let me show another couple charts here. Let me drag this over. I want to show NASDAQ. NASDAQ was a little divergent this morning and was a little tougher to trade because it just was simply not breaking out like the other markets. But let me show a trade you could have taken. There's actually a couple of trades here. And if you have issues trying to visualize support and resistance levels, this is where your breakout math along with the other tools come into play, because it really helps you. Let me illustrate it this way. Can you see right here? I'll just show a couple of areas where this area here around this pivot was very strong resistance, like all morning long, right in here. See it? Right above the pivot. Hitting its head, hitting its head, hitting its head. Can't get through it, can't get through it, can't get through it. Boom, boom, boom. Now look at what it does here right around 7 o'clock. And we always perk our trading eyes and ears up around 7 o'clock because we're expecting things to happen, yes? Here's a nice little pop. And here's what's nice about it is you had your out right here. In fact, I think we were calling this. Remember we said 43 3/4? Does that sound familiar? Watch it hit its head at 43 3/4. So in case of NASDAQ, you know, you're only looking to go from pivot to pivot. Okay, sometimes that's all you're looking for. You get in, you get out. In other words, you have a fixed target. Fixed target. I'm looking to get in here, and I'm looking to get out there. I don't care where it goes after that. But let's say you didn't take that trade. Here we got a little retracement. Market pulling back, pulling back, pulling back, finding support above the pivot. See it? This is like little critical areas you can train your eye to look for. By the way, I think everybody knows we're building this little trader kit. We'll have this done in the next few days. We're going to have like detailed charts and videos that show all this. If you become a member, you'll get a nice trader kit that'll show all this in very good detail. We're just kind of doing highlights right now. Actually, you're breaking out to a fresh high right now. But let's take a look at this trade here. Here you get a couple of different entries. Let's show a couple of different entries. Here was an entry here. When it broke the retracement line, that was a good entry around 38, 39, 40. And even if you didn't get that, it came and it broke this pivot. See it right here? Here was your secondary entry right in here. See it? See how it punches up through, pulls back, finds higher level of support, and you could have popped in here at 43 3/4, 44. Anywhere in here was a good entry. Now, technically speaking, a couple of things could have happened. If you trade the fixed target, pivot-to-pivot strategy, you would have pulled the trigger and gotten out up here. Remember we were saying 5150, hitting its head, 5150, bank the coin? That sound familiar? This is why we were saying it right here. See it? See it hit it twice and reversed. Now, since NASDAQ is only $5 a tick, you can employ this strategy as well. You can do your say you put 2 contracts, now your risk is doubled, $10 a tick, $10 a trade, right? 2 contracts instead of $5 a tick, now you double it. So your initial stops now, instead of say $50 to $70 of risk, you're risking 100 to 140. So if you can handle that, one thing you can do is kind of like Gary shows in the room. See how he pops some out when he gets some profit? So this is take your fixed target, get out around a pivot, and then you can trail the stop on the second one. See here? There was only a couple of times when it almost nicked the stop right in here. See it? Here it might have came close to nicking you out, and then on this retracement here. So technically speaking, if you did the double up strategy, the fixed target boom at the, and then trail the stop, you'd technically still be in this trade with a stop in this area right here. You'd still be long on this breakout right here, trailing the stop on it right in here. You will have already cashed one out at the pivot and trailing the stop on the other, trailing the stop on the other. Of course, our guidance dots from the Pro Package 12 range guidance have been long all morning, just like the other equities. That's why we were looking for this long break here, right? That's why these dots are really important and very valuable to have on your chart. Any questions on the NASDAQ trades? Questions on the NASDAQ setups here from this morning? All right, I got one more chart to show here real quick. I'm going to show the dollar using the oracles. This is another good instrument. It's $5 a tick. You can track this and trade it. It's a very good instrument when it moves. It's like anything else, though. When it chops, you want to stay out, right? So, for instance, back here, early morning, overnight, take a quick peek at this. You're in this choppy kind of melange, no man's land, right in here. See how we're just chopping around and chopping around. And interestingly enough, about the same time that the equity started to break, the dollar broke down as well. Now notice what was happening with the oracles. The oracles were kind of oscillating around, but I want you to focus on one thing right here. Check this out. This is where the oracles were really solid, very strong. Notice in here, when we started to take out support, of course we had a couple of things in play that were helping us, right? The first thing was our guidance was telling us, think about taking a short, yes? Here's our 12 range guidance. This is saying, think about taking a short somewhere. This is what this is kind of telling us, yes? Look for a short setup is what guidance is telling us. And then the oracles confirm it right here. Notice that you come out of this consolidation patch on the oracles like such, and what do the oracles start doing right in here? That's why these things are like invaluable. If you're going to trade the currency futures, the dollar, 6E, 6B, any of those, you really got to have these on your charts. Seriously. Look what the oracles do right here. Boom. Right as the market started to drop, in fact, you could almost make the case that it kind of led them a little bit. See, the actual break of the price occurred over here when the oracles were portending a break over here in the yellow patch. See it? It was telling you, short this baby. Short it. Now, you had a couple of opportunities to get filled short. Let's say that you didn't, and let's blow this up so you can see real quick how we look at this. I'm not going to get into a whole lot of detail, but it's pretty easy to see. See, you could have had a sell order sitting right in here on the break of this very clean. You see how it's clean? Sometimes they're clean, sometimes they're not. Right here, for instance, at this 77.65 area, you had a break. So technically speaking, your sell entry was right here on these bars, right there. Now you felt a little heat. You were in the good. It moved in your favor. Oracles were confirming the move. Trend dots are down. You're in the right direction. Yes? Here's your short entry right here. Now, it pulled back to you a little bit. You felt a little bit of heat on this retracement here. But since you're trailing your stops a couple of ticks behind the dots, you were still good, right? Now, here is another case for wiggle room. Look at the wick of this candle right here. See how it nicks the stop by just a tick. See the tip of that candle? Just the wick. I mean, literally by like a tick. So you got to really, I don't know how to emphasize it. The whole point of a couple of ticks of wiggle room can really make a difference. Because look at the beautiful breakdown. The oracles fall off the map. Trend dots pointing down, and then of course there's your dollar short right there. Just boom, right to the pivot within a few ticks. Now, in all likelihood, you probably stopped out. You either cashed out at the pivot or you found another way to get out down there. And then she goes into what becomes kind of a little consolidation or yellow bar probe. Oracle's flat as a pancake, maxing out negative. Guidance short. We're looking for short reentry. So if you miss this trade, what are we thinking to do? We're saying, hey, if she takes this pivot out, this support level here, what am I going to do? Right? If she takes that pivot support level out, see the support level clear as a bell, right? Just a tick or two above that pivot. See it? Right there. There's your entry. These bars right here, that's your short entry right here. Red stealth, guidance down, oracles negative as can be. boom, you pull the trigger, I don't know, 34-ish, you're filled, and then you trail your stop, 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 and you probably got nicked out of the trade somewhere down in here. That probably got you right there. Now, just some quick math. There's 2 ticks per deal here. See how it's 73.50. So there's 2 per dot there. So you went from basically 34 to, I don't know, call it 2. What is that? 32 times 2 is 64 ticks, approximately, depending on your fill, of course. You know, it might be a little better, it might be a little worse. You might have got out down here at this pivot. See how it pinged it right on the button? I don't know, depending on your exit. 64 ticks times 5 is how much? See how it gave you a couple of chances at this pivot? Just hit it like 3 times. 1, 2, 3, 4 times. Plenty of chances to get out down there, right? 64 times 5 is how much? 64 ticks, depending on your fill. Times 5, 300, 320. 1 trade on the dollar here, 7 o'clock. You could have taken this in a YM trade and been up, $600. This particular trade here at 7 o'clock on the dollar felt no heat at all. I mean, there was just the oracles were down, guidance was down, red stealthy, red bars, breaks a pivot. I mean, it doesn't, a short entry doesn't get any better than that. I mean, that's like textbook breakdown trade right there. Anyway, all right, well, that's what I had to show here. Any questions on the trades that set up, YM, NASDAQ, and the dollar? We did record this. We'll send it out. You can take a look at it. We'll do a couple of screenshots, and we'll try to get this kit wrapped up here soon for the members. The training kit is going to be fairly extensive. We're going to have from start to finish everything you need to trade professionally. I think almost everybody in here, well, we see the same faces every day. We know you're trading for a living. Most of you are, or trying to, or starting to anyway. And this is all the tools to do it right here. So any questions on the recap this morning? Guys, do you have anything else?
Yeah, just real quick, Bruce,
Okay.
on your question, Rich is already gone. He has to get ready for another one. And on your question, by the way, on ES, one thing that we found on ES is there's a lot of institutional trading like Charles was talking about, where they'll literally try to get 4 or 5 ticks, and that thing can literally chop around till you fall asleep and hit your head on the desk and get a concussion. We just don't like it. We call it the slop and pour 500. And you'll find that if you trade what we've got in this room, that you can be a very, very successful trader. We've got lots of people that are making bank every day.
All right, guys and gals, everybody, we do have a webinar tomorrow for members. Saturday morning webinars, 9 a.m. Pacific. We'll send links out to the subscribers. I think the free trialers, you guys have a webinar coming up. It's dedicated to support. 9 o'clock Pacific. You should have a link in your email. Anybody on a free trial not have the link for the webinar? Anybody not have the link for the free trial support webinar coming up? Anybody not have that link? That's just for free trial people. It's going over folks who are just learning, just trying to install indicators and do those kinds of things. It's not for members. I see everybody has it. Okay, KC, Marco, everybody have a great weekend. We'll see some of you tomorrow morning. If not, enjoy the rest of your Friday and have a good Saturday, Sunday. We'll see you all on Monday morning. And enjoy the nice weather. I think that's a wrap, Gary. Let me turn off the recorder and